All right, guys, welcome back. So it's been a while since we have talked about Carvana. And well, the big news is today, over the weekend, is this company is joining S&P 500. So from going down from $400 almost to $3 and then coming right back up, after market close, the stock is up another 10%, $56 billion. And again, this is according to my Thinkorswim. Year to date, 96%. So after hours not included, of course. But this company will be traded in S&P 500. So we can go through some of the names, but we all know that this news, this pop, I don't know how much fuel it has, but certainly I was on both camps. But for the most part, my Twitter record says it all, that yeah, I was right, I was wrong. But for the most part, from like $20, $10, $15 levels all the way, I was pretty bullish when everybody was super bearish on this name. But in the beginning of the year, I think I was talking about this one and thinking that this stock could plunge a lot more and close the year negative, but I was completely wrong. So 30-50 in 2023, summer squeeze, smoking shorts again and again, short sleepless nights. You never short when it's going up, you short it when it cracks, 208. And then, I remained bullish for like 2-3 years up until this year. In the beginning of 2025, I was talking about possibly this stock pretty much pulling back a lot more, and I was sharing it here too. Maybe go back to like low 200s, and then it kept squeezing. I was talking about, maybe it's gonna even hit 500 at some point because shorts were going crazy. And again, this is last year, and they just kept squeezing and squeezing and squeezing. So here we are. Stock is at 440. Okay, after market close, highest close. I want to go take a look at weekly. This is the chart. If you're, take a look at this. I have been following this name since 2019, I believe, from all the way around like $80 and then $20. It had this huge rally, COVID rally, where from low like around like 20s all the way to 350, came straight back down to $3, and then this is when a lot of people got squeezed. But again, to be fair, we did pull back to those levels like 220. It did go a lot lower than that. So it went as low as in April 150, but then it's grinded its way back up, and it kind of was in this big distribution channel where the stock spent killing a lot of premium. So now, well, here's the levels I'm going to be watching. So essentially, this stock made a highest close today on Friday, regardless of aftermarket hours. All-time highs prior to that was 413, and I was watching it to pretty much squeeze even on Friday, maybe a little bit more, because it was looking super suspicious. And I shared it on my Discord as well, where I was saying that calls to premiums are a bit strange. Like, calls were a bit pricier, and then here we are, S&P 500 inclusion, December 22nd. It will be trading in S&P, essentially. So 2 more weeks, and it will be included in S&P 500 and levels. So I'm not as bullish. It can even go higher, but I'm gonna give you guys a couple examples, right? I have, I'm not gonna talk much about anything about essentially S&P 500's decisions, including certain stocks at their levels, some good, some bad. But I'll give you guys a couple examples where this is Match Group. Like, these are inclusions, like prime inclusions, where like these stocks were doing really well, and when they joined S&P 500 and what happened. And again, there are many examples you can go through yourself, but it just doesn't mean that the stock gets included in the S&P 500 index. Yes, it's perfect exit liquidity. Anybody who pumped the stock to these levels, they have a pretty good index buying essentially, right? All those funds who must own the stock, they will be buying it because they have to track the S&P 500. And then everybody who wanted that exit liquidity, well, here you are. S&P 500 is your exit liquidity. And this is Match Group, Tinder, okay? 182 in 2021 when everybody was at home. Like, it was obvious that like we wouldn't be stuck at home forever. And but this stock was included in S&P 500 right there, okay? And the rest is history. Last 4 years, we're sitting at 34. Another example I can give you guys is Penn National, okay? Penn Entertainment. This stock went up from $3 from pandemic low to 142, and guess what? This is when it got included in S&P 500. The rest is history. 5 years, yeah. Here we are, $13. Okay. Yeah, there are some successful ones, right? Palantir, right? This stock was included in S&P 500 around like 30 something right there, right? And then it went up pretty crazy. But for the most part, risk reward, I think I have it on for Airbnb as well. But again, it joined S&P 500 right there. It hasn't done much. Who else? I'm trying to remember here. Coinbase joined S&P 500 somewhere. Was it right there? Yeah, hasn't done anything. Who else I can think of? DoorDash joined S&P 500 somewhere this year. I'm trying to remember. Maybe somewhere here. Yeah, hasn't done much. So my point is, do not expect it to go crazy from here, from these valuations. My bias would be going into the end of the year bullish to neutral, because it won't be included until essentially Christmas in the S&P 500. So I'm going to be watching this stock, maybe neutral. I'm not as bearish going into that inclusion date, and it could be sell the news for some people, but overall, if the big liquidity, big boys want to get out, they have to wait for that liquidity to come, index buying to come to unload their shares. Another thing I want to show you guys here is how insiders dumped crazy. I don't know how much they will sell after the inclusion, but for the first half of the year, it was mainly the CEO, I believe. He was dumping in May, June, July, August, September, and then kind of like didn't do much of a selling October, November, December. But October, November, December, and the last like 2 months maybe, I'm seeing more other insiders were dumping the stock. First time seeing like so many insiders dumping the stock. But this is another thing. You want to keep that in mind, right? So maybe more than like $2 billion worth of stock was dumped this year alone. Maybe even $3 billion, but you just have to do the math. So the highest came in at the highs of 350, somewhere around there in July, where again, summer months is typically market drifts higher and it's not volatile. This is when it was getting dumped. 687 million, and then July 334 million, and then August $389 million worth of shares. So, and yeah, I think it can look very similar. I'm not gonna bet that the stock could until 2026. It could look something like match group, but I'm pretty sure it can happen to not this degree. But I think this S&P 500 inclusion for Carvana, in my opinion, if it's not like tippity top, it's like very close. And I'm going to be watching this name essentially again very carefully. It can present really good opportunity, just like it has done right there. I mean, who is buying cars right now, right? So what's special about this business? So again, this is just my opinion. This is just my take, and I don't have any shares. I don't own any options of this stock. So, but keeping close an eye on this one for a possible setup in 2026. But this is just quick update for the stock that we haven't talked in a while. So I'm going to be keeping an eye on this one, maybe doing an update. So yeah, careful. If you think that this is a long-term hold, yeah, I don't think so. Again, this is just my opinion, not a buy or sell recommendation. Again, thanks for watching. See you in the next one. Take care. Peace.